All right, today we are taking a deep dive into the technicals for GSI technology, ticker GSIT. And what's so fascinating right now is the incredible conflict happening in the data. I mean, it is a genuine tug of war between some super strong bullish signals on one side and a whole bunch of really loud warning signs on the other. So who's actually winning this fight? Let's break it down.
And that right there is really the big question for GSIT. You've got the engine just screaming, pushing it to new highs, but at the exact same time, you've got multiple gauges deep in the red zone. This creates a massive dilemma for anyone trying to figure out this chart. And this quote, this is the result of that dilemma. The automated analysis our source material uses basically spits out a hold signal. But, and this is the key part, with low confidence. It's pretty much the system throwing its hands up and saying, honestly, I have no clue. So we're going to unpack exactly why the data is so scrambled.
To really get that hold signal, you have to see this stock for what it is right at this moment, a company at a major crossroads. It's had this powerful, exciting rally that's also created a ton of uncertainty about what's going to happen next.
So here's the core of it. The stock's sitting at $4.91 after staging just an absolutely heroic recovery. The problem is, it all happened so fast, it went up so far that it's now stretched incredibly thin. Think of a rubber band pulled almost to its breaking point. So first, let's grab the rope on the bullish side of this tug-of-war. The evidence for positive momentum is really compelling, and it makes a strong case that this stock has plenty of fight left in it.
Now, check out the V-shape on this timeline. It's pretty dramatic. The stock gets absolutely hammered from a high of almost $6 all the way down below 3 in September. But then, just look at that rebound. It just rockets back up to $4.91 on October 3rd. That is one powerful reversal. And get this, that surge wasn't on some tiny little volume either. Over 800,000 shares traded hands on that one key day. That is a massive number for this stock, the highest in months. So this wasn't quiet, hesitant buying. This tells you there was real conviction, maybe even some big players behind that breakout move.
What's really incredible is just how strong this move has been. The current price isn't just a little bit above its key moving averages, it's miles above them. It's trading way higher than both its 50-day and its 200-day average, which, is a classic sign that the long-term trend might be flipping from bearish to bullish.
And to top it all off, you have the on-balance volume, or OBV. The easiest way to think about this is like a running scoreboard of buying versus selling pressure. And for GSIT, it's at a massively positive 88.5 million. It confirms that for a good while now, the buyers have been firmly in control, which adds some serious legitimacy to this whole uptrend.
Okay, so the bull case looks fantastic, right? But now we have to pull the rope in the complete opposite direction and look at the bear's warning signs. This is where the story gets really complicated and where extreme caution becomes the name of the game. This slide right here, this is the whole conflict in a nutshell. On one side, you've got your trend and volume indicators. They're all screaming strong uptrend. But on the other side, you have a totally different family of indicators, the momentum and volatility ones, and they are all flashing these extreme warning signals.
Let's get specific. The Relative Strength Index, RSI, is sitting at nearly 79. That is well into the overbought danger zone above 70. The CCI and Williams %R, they're also deep in their own overbought territories. This often happens from just intense buying, maybe even some FOMO kicking in, and it usually suggests the stock is getting exhausted and could be due for a pullback.
Now think of Bollinger Bands as a kind of dynamic channel where a stock should normally trade. Well, GSIT hasn't just touched its upper band, it has completely burst right through it. It's kind of like a car engine redlining. The price is at $4.91, while the top of that channel is way down at $4.55. That's a classic signal that the move is probably unsustainable right now. And if you needed one more big flashing red flag, this is probably it. Based on a statistical model of its recent price action, the stock should be trading closer to $3.17. At $4.91, the actual price is a massive 55% higher. That is a huge statistical outlier, and in the markets, outliers almost always eventually snap back toward the average.
So, the battle lines are drawn. You've got this unstoppable force of a bullish trend meeting this immovable object of overbought warnings. The big question, of course, is what happens now? Well, the analysis lays out three potential paths forward. So what happens from here?
Well, there are pretty much three main possibilities. First is the bullish continuation, where the momentum is just so strong that it plows right through all these warnings. Second, and this is maybe the most probable, is a healthy correction, or the stock just needs to catch its breath, pulling back towards that 455 level to let things cool off. Or third, it could just go sideways for a while, as the bulls and bears fight it out to a stalemate.
And that brings us to the conclusion, and the real analyst's dilemma here. What are we supposed to do with all this conflicting information? What's the main takeaway from this whole intense tug of war?
So, it really all comes down to this. You've got the bull case, a powerful, high-volume breakout that has cleared all the major hurdles. But then, you have the bear case, which is just as strong, pointing to those extreme indicator readings and that massive 55% statistical deviation. This quote from the source material just hits the nail on the head. This isn't some weird anomaly. It's a textbook situation. You have a fantastic, strong trend, but it has gotten way ahead of itself in the immediate term. So the bottom line is this. The long-term picture for GSIT might genuinely be getting better. That breakout could be the real deal, the start of something big. However, and this is a big however, in the here and now, the risk of a sharp, sudden drop is extremely high. Chasing a stock in this condition is a very risky game.
And that leaves us with this final thought to chew on. When you're faced with a situation as conflicted as this one, what's the greater danger? Is it jumping in too soon and getting totally caught in a pullback? Or is it waiting for a safer entry and potentially missing the next big move up? It's a classic investor's dilemma. And for GSIT, the answer is anything but clear.